Hi, and thanks for joining us today. I'm in studio with Mark Weston, our Valuations and Advisory Partner. Mark, we've had a lot of questions lately about impairment. What can you tell us about it?
Hi, Bart. Thanks for the invite. Impairment, what a great question at this time of year, particularly in these economic circumstances. First thing, impairment. If you really want to know about it, take a look at IAS 36, aptly entitled Impairment of Assets. Fairly simple read, IAS 36 defines two general groups of intangible assets. The first being finite-lived assets, and those are assets that are amortized over a specific period of time on the balance sheet. Secondly, it defines a group of indefinite-lived assets, not infinite-lived assets, indefinite-lived assets. Those are assets such as goodwill or licenses or patents that are expected to continue on into the indefinite future. Next thing to know is when we test for impairment. Testing for finite-lived assets is quite simple if there's an indication of impairment. What could a good indication of impairment be? How about a pandemic, for example, if in fact your business is negatively impacted? What about indefinite-lived assets? They have to be tested for impairment annually or when that indication of impairment occurs. Next, the test. The test is actually quite easy. You simply compare the carrying amount, which is the amount recorded on the balance sheet, to the recoverable amount. The recoverable amount is defined as the higher of fair value less cost to dispose, or value in use. Fair value less cost to dispose is simply an exit price. It's the price you would receive if you were to sell your asset to a market participant under no compulsion to transact. The price you would receive, not what you paid for it. Value in use, however, is the cash flows that management expects to receive from the use of that asset. Backing up a bit. Test, very simple. Compare the carrying amount, which is the amount on the balance sheet, to the higher of the value in use or the fair value less cost to sell. You'll have a differential. If that differential is negative, you have an impairment, which is the subject of another one of these chats.
Okay, and how does COVID affect all of this?
Well, COVID can affect it in two ways. First of all, it's probably, in most cases, a great indication of possible impairment. For example, if I had a chain of barbershops or a chain of restaurants, COVID has likely impacted my revenues. As such, I should probably test any intangibles associated with that business. If, on the other hand, my business is a video conferencing business, chances are COVID has impacted it positively, and as such, I wouldn't test. Bottom line, step back, understand the test, look at how the pandemic, the economic environment might impact it. Give us a call.
You heard him. Thank you so much, Mark. I really appreciate that. If you have any more questions for Mark, give us a call at the number below, or you can email him at valuations@davidson-co.com. Thanks, everyone.